Good morning all, this is Tanya from the underwriting department. I'm here to discuss a little bit the new temporary guidelines that Fannie and Freddie put out in reference to mortgage loan lates and what is to be expected to happen in the industry due to these terrible times with COVID-19. A lot of borrowers have taken forbearance and have done different types of modification to their mortgage loans. Note, this guideline is temporary, meaning that it's going to be effective for a specific amount of time. I'm sure that it will change as our current situation evolves. These particular specific guidelines is specifically to address mortgage history and to assess the borrower's payment history. Why have they done this? I believe it's been done because of the current times. They understand that these are tough times for a lot of people, and therefore they wanted to provide some leniency towards mortgage payments. This guideline has nothing to do with lates when someone else is paying the debt, meaning co-signed debts. I know we've had a lot of questions concerning co-signed debt, 12 months mortgage history. Those 12 months mortgage history continue to have to be made on time. This temporary guidelines is specifically for mortgage debt only, assessing the credit history. If you're trying to exclude a payment made by other and the payment has been late within the past 12 months, regardless of this forbearance or not, we cannot exclude it. It could not have been made late. So how does this impact you and your borrower? If your borrower has been making on-time payments, even though they've been in a forbearance and they've still made their payments, nothing has changed for them. You can continue to close. On-time payments are payments that are made the month due. So for example, if your new mortgage loan is going to close in July, the June payment must be made. This applies to all mortgages, not just your subject property. So any other mortgage that the borrower is obligated on, this requirement will apply. And we're going to have to take extra steps to verify at closing that this has been done. What are the extra steps that we're going to have to take? We're going to have to verify the mortgages up to date, meaning if your credit report reflects the last day of reporting March or April and you're closing now in June, we're going to have to get either the payoff, an updated credit supplement, or evidence of payment from your borrower that they have made the payment up to May if you close in June. These are things that the underwriter will question for, but it'd be great if you guys can get it to us when we're CTCing the file. That way it doesn't hold up your file from moving on to the next step. Because like I said, this is something that's been put out by both Fannie and Freddie, and we need to abide by it, because if not, we won't be able to get this transaction purchased. Now, there's different steps and different options that you can take. Again, if your borrower has been in forbearance but has made all his payments, no other requirements need to be made. You just have to provide evidence that the payments have been made as scheduled. Now, if your borrower has missed one or two payments during the forbearance period, but they have since made up the payments and they've paid off the total amount due and their mortgage is now up to date, you have to provide evidence of source of funds for making these payments up to date, and you can proceed. Now, the tricky part comes when the borrower has actually granted a deferment and has been in some sort of modification period, or their loan has been modified. If this is the case, Fannie Mae and Freddie Mac are requiring that your borrower makes at least 3 monthly payments based on their new established payment arrangement. And we will not be able to lump sum those payments. Those payments will have to be made 1 month, 2 months, 3 months, and then after that fact, we'll be able to proceed with a mortgage. I would assume that the reasoning behind that is that if you went through a hard time and you have now reestablished yourself, we want to see that yes, you have, and you're going to continue to make these payments, which is why 3 payments are required. But you will be able to close and proceed without having this missed payments affect you, as long as you've shown that you're able to make 3 payments on time based on your new modification period, And obviously your income has to be stable, and you'll be able to proceed in doing so. I hope this clarifies any questions you guys may have had about this, but if not, and if you have any additional questions, please feel free to contact the underwriting department at our scenario email, or you can reach out to me personally via email. Thank you. Have a good day.